Good evening, everybody. My name is Shaun from Berg. I'm from PSG Online. I head up client education. Just to get started, I'd like to ask a quick question. How many of you have developed a trading strategy before? Great. Thanks a lot. Okay, looks like most of you have not developed a trading strategy. So here's my agenda. The idea is just to quickly discuss what is a trader. And like my past webinars before, I think a lot of people get confused between a trader and an investor. Obviously, the main focus tonight is talking about a trader, but what is a trader? And obviously from that, we're going to talk about what is your risk profile, your trading style, and then touch on a trading plan. But the main presentation tonight is working on what I call a high probability trade. And there's various strategies out there. The one I've been using for years is called breakout trading. Using chart patterns, and we discussed 3 of those chart patterns and the ideas of the steps behind that. So the idea and the main objective for tonight's webinar is just to highlight for you guys that it's developing a trading strategy. And as you become more knowledgeable about trading and more knowledgeable about technical analysis, you find what works for you, and you stick with that. And I can give a word of advice I've learned over the years is to keep it simple. And the more complicated, and then that you're not going to make money from that. It's keep it simple, and that's how you make money. Okay, so let's move on. So, as a trader, trading can be both profitable and gratifying. It's nice, especially. I know a lot of us aspire to be sitting at home and working from home, especially trading the markets. And I know some of you on this webinar do that, and I've done it in the past myself. But to maximize your financial profits or the benefits of being a trader, and also your enjoyment. I believe if it's not enjoyable, don't do it. You need to decide what kind of stock trader you are. So we'll talk about it again just now, the different styles, and I know I've harped on this in the past, but it always depends on a lot of things. And number one, your personality. If you're a conservative person and you want to be a cowboy as a trader, you're going to have a bit of conflict there. You're not going to be able to sleep easy at night. But as a trader, compared to investing, you need much more time. And we'll talk about different styles just now and how much time you need. But that's very, very important. The more time you've got, the better your chances are of being a trader. And when it comes to to capital, the money to be involved, I always talk about risk capital, because obviously this is money you can't afford to risk. The more, the better. And obviously, lastly, is your risk profile. As a trader, you want to take on higher risk, hence the higher or the potential higher returns. Okay. So I use this as a roadmap. I call it my roadmap. We talk about your financial objectives. Now, obviously, in this context, we're talking about as a trader. Now, my goal every month as a trader would be to make between 10 and 15% on my margin. Okay. And if you multiply or analyze that, you're doing pretty well as a trader. So that's where I start. And we'll talk about a trading plan just now, how you work this thing backwards. So that's my goal as a trader, 10 to 15% per month. That might be conservative. Some of you might be doing much more than that. I'm happy making those kind of returns. When it comes to risk capital, as I said just now, the more the better. I find the more funds you got, the more flexibility you've got. And also when it comes to risk management, especially on what they call money management, we talk about position sizing. The more funds you got, the easier it becomes also. So the most important resource, instead of money, I believe the most important resource as a trader is time. So you need at least half an hour a day as a swing trader, placing the trades, maybe at night, and then obviously following up intraday and things like that. But I've learned over the years that, we come back to it, I say the trading plan, you do your homework at night, you review it in the morning. That all takes time. So it's much more than just placing the trade and much more than just researching it and things like that. All those other logistic things you have to take in consideration. Your level of knowledge and experience is also important. So we talk about, obviously as a trader, you need to have a good knowledge of technical analysis. Getting your timing right is a critical success factor. And this comes with, we talk about trading experience. Start small. And maybe you might do some paper trading, you might want to simulate. But the main idea with this is to gain confidence. Confidence in your stock picking abilities, and obviously confidence in your methodology or your trading strategy. And very, very important, a lot of people don't take into consideration is your risk profile. And I know I have spoken about this in previous webinars. You know, we talk about being a prudent trader. And if you look at it, the one highlighted there in red, another word for prudent is being a wise trader. So you want to go for high rewards at low risk. And we'll talk about it in a few more slides. We'll talk about high probability trades, where you want to bend the odds in your favor. So that's a quadrant you want to be in. You want to go for high rewards at low risk. Some of you might be more on the aggressive side. I call those the cowboys. High reward at high risk, it's fine, provided you're looking after your risk management. If you're watching your risk management very, very closely. You should never be in that last quarter at the bottom there. Talk about being speculative. This is the gamblers. I believe you should never be in a situation where you're going for high risk but at low reward. You're wasting your time. You're throwing your money away. Okay. So you want to be in the top left quadrant there as a prudent investor. High reward at low risk. Okay. So from that, those kind of questions you ask yourself, you'll ask yourself, okay, what kind of trader am I? We talk about a position trader. You can be a swing trader or a day trader. These are three broad styles of being of trading. And we'll go into each one of them into more detail now. A position trader, I call this the active investor. Instead of buying and holding, remember as a trader you're buying and selling, but you're holding a position more for the longer term, from a few months to a few years. You might even say from a few weeks to a few months to a few years. So you're not concerned about the short-term fluctuations. That's what a swing trader or day trader will take advantage of. You're looking at more the longer-term view, and you'll believe that your long-term investment horizon will smooth out the short-term fluctuations. Okay, so you use more the weekly and monthly charts, and your goal is to establish what is the primary trend. Are we in a bull market or bear market? And also from there to try and trade what we call the secondary cycles. Are we trading a correction, or are we trading a rally? So we're ignoring the day-to-day fluctuations. Okay, so that's a position trader. Some of you might be doing that. I do that myself, especially on the CFD side, because there's no expiry. So I like to use that for more of the position trading.